Welcome to this week's Energy Market Wrap from Enverus. We begin with a major reshaping of the U.S. shale landscape as Devon and Coterra agreed to a $25.5 billion all-stock merger, forming one of the largest U.S.-focused producers with more than 1.6 million barrels of oil equivalent per day expected next year and a dominant Delaware Basin position. In more U.S. upstream deal news, SM Energy closed its merger with Civitas, more than doubling its footprint, lifting pro forma production to nearly 550,000 barrels of oil equivalent per day. Turning to U.S. operations, Chevron expects 7 to 10% production growth in 2026, following record 2025 output. Growth is driven by a full year above 1 million barrels a day from the Permian, alongside increased volumes from Guyana and the Gulf of Mexico. In Appalachia, CNX adopted a maintenance plan for 2026 after apex-driven growth last year, holding volumes relatively steady while continuing its long record of consistent free cash flow generation. Moving to the midstream sector, Enterprise's Bahia natural gas liquids pipeline entered service and began moving Permian volumes to Mont Belvieu, with an expansion toward 1 million barrels per day and an extension into New Mexico already positioned for late-decade completion. The company also advanced sour gas capacity in the Delaware Basin and secured long-term commitments supporting broader Haynesville and Gulf Coast system expansions. Further along the coast, U.S. LNG development gained momentum, with Venture Global selecting Worley to execute EPC work for CP2 Phase 2, moving another major tranche of capacity closer to a final investment decision. In another development, Glenfarne secured $5.7 billion in debt for Texas LNG, providing full backing for the 4 million-ton Brownsville terminal. In services and power, Liberty raised $700 million through zero-coupon convertible notes to accelerate deployment of distributed power solutions for data centers and oilfield operations. Meanwhile, in Baker Hughes's Demand Decade update, the company highlighted surging orders linked to artificial intelligence and data center growth, prompting it to double its target for data center-related power bookings. Turning to renewables and low-carbon development, Enlight broke ground on a $3 billion Arizona solar and storage complex, totaling more than 1.2 gigawatts of solar and 4 gigawatt-hours of storage across 5 phases. In another development, policy clarity followed with proposed Treasury and IRS rules for the 45Z clean fuel credit, offering long-awaited guidance on emissions thresholds, eligible feedstocks, and compliance frameworks. Internationally, Equinor is exiting its Vaca Muerta interests through a $1.1 billion sale to Vista Energy, shifting its Argentina exposure toward offshore acreage, while handing Vista producing volumes and a deep set of ready-to-drill wells. In Europe, Ørsted completed a $9 billion divestment program by exiting its onshore portfolio, sharpening its focus on offshore wind and improving financial flexibility. And in Africa, Total Energies resumed construction on the Mozambique LNG project after a 5-year halt, putting the 13 million-ton development back on track for a 2029 startup following improvements in regional security conditions. That concludes this week's Energy Market Wrap. Thanks for listening. Keep your finger on the pulse of the energy industry with Enverus Publications. Our experienced writers cut through the noise and deliver insights that help you stay ahead of the curve. To learn more, reach out to business development at Enverus.com or visit www.enverus.com.